Let's talk more about those movements now. We've got Joseph Busha from JM Busha Investments joining us in studio. Thank you very much for making the time. I do understand that it was load shedding that dragged you all the way to our studios, but we thank you nonetheless. Let's start with the overall market movements that we saw today. Not a great day. I did say some broad-based losses across your resource stocks, your industrials. What were some of the major drivers?
Basically, you're looking at Naspers, some of the tech stocks. Remember, Naspers and Process are heavyweight on the JSE, and the mining stocks are still quite significant contributor to the overall level of the index. So we've got the Impala Amplus group also losing Harmony, which gave their production today. Production down about 4%, also losing ground a little bit. You have some of the retailers also losing a little bit. So I think just overall broadly, where the market is just kind of giving back some of the gains we've seen over the last 2 weeks. We've seen lots of volatility, and I think just this continues given the uncertainty in the market, in particular the global markets and what's happening in Russia.
Mm-hmm. I don't think we saw ourselves sitting with the rand as weak as it has been when we approach the festive season. And I'm just wondering your thoughts about, small to medium businesses that are importing and the pressures that they'll be facing this festive season. What do you make of the volatility of the rand and really just an outlook, if anything, a positive one perhaps?
It's unsettling. I think, one day you're really up down 2%, the next day you're down 2%. We thought the rand was moving towards 17. It was about 1720 from 1850. So it's really stuck around there, and it's really just refusing to move. I think towards December, it's kind of now historic, whether it's because there are less imports where people basically are kind of closing down, and hence there's less pressure on the rand in terms of people selling and buying dollars, and you might see that basically the rand will gain. But I think it's not only us who are losing. You've also seen some of the emerging currencies, in particular smaller currencies in SADC, like the Zambian kwacha, the Kenyan currencies are also losing ground with the US dollar.
Mm-hmm. Let's get into some company updates, and let's start with Life Healthcare. Their earnings overall down for the full year, but speaking to the CEO earlier, he did indicate that it was mostly the first half of the year that had an impact on the annual numbers, but they are actually quite confident about the volumes back at the hospital premises across the country and in Europe.
So the numbers are not looking good. I think just the pressures really are of either the best, but I think if you look in terms of their occupants and so on, there was an improvement. So you're not quite sure whether it's the stay where the patients were in their hospitals and so on. But I think also given the fact that COVID is kind of getting away, and there's a little bit of a recovery in terms of that could have affected basically patients obviously visiting some of their hospitals and so on. It's going to be, I think, like that. It's not really necessarily about season. We could say, during our winter period, possibly people, kind of get to a hospital more because people are a little bit sickly. But it's just a tough, I think, trading environment.
So it was interesting, right, that they decided to declare a dividend despite the numbers that we saw coming out there.
That is really to just kind of please investors, because remember, investors are just looking for a little bit of something to take away for Christmas. So if there's no capital gains in terms of the share price itself, they have to declare something to make us happy.
Yeah, and then Harmony, I mean, they production down quite a bit. They did say part of it was because of the closure of a particular mine. But what did you make of the overall update that they had to share with us? You did say that the share price wasn't too excited about what they shared. So
production is down 4%, but if you look in terms of their costs, also up 4%. So that's not really good when you basically see that your production, because remember the profitability of mines is directly linked to the number of, or the production or ounce of gold they produce just times the price of gold. So once production is down and then your costs are going up of producing, which means your profitability is going to be less, and hence you are likely to start posting some losses. The average, I think, price per kg was about $1,700 per ton. So the average is quite good given where the gold price has been over the last few months. But I think people are not just happy with that production. Because it's certainly to affect the bottom line, and you see that they had bumper profits, I think, in the last few years, but I think things are kind of normalizing a little bit.
And then investors Investec, a final company for us to look at this evening. What did you make of the numbers that they released today? I mean, I didn't find anything extremely bad about it. I mean, they kind of just emulate the message that has come across the banking sector, which is a positive one of late. What was your thoughts?
Revenue up.
Yeah.
I think that was quite good in terms of revenue up, being about 17%. But the assets under management, the AUM was down about 7.6. So I think that's what people are not happy with, because remember, once you start getting net outflows out of your main income driver, I think people then say, well, what's going to happen next year? And is it going to be a continuous trend, or it's just once off, where possibly just a tough trading year? But I think that was really just the negativity about the Investec results.
Brilliant. Thank you so much for joining us in studio, Mr. Joseph Busha there from JM Busha Investment Group, joining us this evening. And that's all your business bulletin for now. Sally will be back with updates in the coming hour.